Welcome to our trading recap for the week of May 19th to May 23rd. This week we had a rough week. We lost a total of $10,378.52. We're not panicking. We'll explain why in a second. So what happened? Well, the market was a little bit choppy and had a lot of reversals this week. Was not to our Algo's liking in terms of the trends. So we got into a trade on May 19th over here on US Tech and the NASDAQ toward the end of the day. So the market had opened, it had gone down a significant amount, and then it started to reverse upward. Our Algo decided to take a trade over here based off the core value and exited the trade due to working time, which is a stipulation that exits the trades 30 minutes before the day closes, whether we are up or down. So we ended up closing the trade over here, entered here, lost here, and then did not trade the next day, which was the 20th. On the 21st, the market, same thing, started going down, had a reversal, and we got into a few trades, 3 trades over here. Now, this one we got saved with our directional liquidation filter as we exited the trade right here. So we could have gotten absolutely smoked on this trade, but we ended up taking a small loss, got in here and got out right here due to our directional liquidation. So directional liquidation states that if our directional value comes down and hits a certain value, so a value closer to 0, we will get out of the trade. So we had a positive directional value up here because the market was moving upward, so our directional value was positive, and before it turned into negative direction, closer to where it got to 0, we exited the trade. So we don't wait till the direction gets a negative. We actually exit the trade closer to 0. So we got out here and saved us from getting absolutely destroyed as the market kept going down further. So we actually got saved there. The next day we had another directional liquidation, small loss over here. So the market obviously was moving down from the day before, and we had this candle down here. So the algorithm believed the market was going to continue going downward, had enough momentum. Directional value was good enough to go down in a negative direction, and the market started reversing. And instead of getting out toward here at the end of the day, we got out right over here. So in here as a short, out here, and out because of directional liquidation again. So it had saved us again from further losses. And this is the 23rd. On the 23rd, we had a massive candle down. As the massive candle was coming downward, we started entering trades. As the core value started getting negative, we started entering shorts, and the market reversed, and we got out of the trade over here due to, again, directional liquidation. So directional liquidation can definitely help us. It is a factor that has helped us a lot in live testing and back testing, where the directional value starts moving the opposite direction. So here we got into a short. So obviously we want the market to continue going downward, but the market had reversed, and instead of taking a chance, our directional liquidation gets us out of these trades. Same thing over here and same thing here. So this was a short, this was going to be a long, so we were hoping the market was going to continue going upward. It didn't reverse, started going down, and got us out at a great time here and a great time over here as well. So that was our directional liquidation. That is our trades for the US Tech. Silver, we didn't take any trades in silver this week. So 19th here, no trades there. And on the US yen, we took trades. Let's see, this is the 19th, nothing on the 19th, nothing on the 20th. So on the 21st, liquidation over here. So this is a liquidation. This is not directional liquidation, this is a liquidation. And so what that means is, so we got into a short here, and instead of the directional value alone getting us out of this trade, we have a liquidation factor. Liquidation factor means that the core value comes down and hits a certain number. So for example, if the core value down here was, let's just say negative 30, if it came to let's say -5, we would exit the trade. So whatever our liquidation factors are in our parameters, so here's the liquidation factors. So each of the tiers that we have has a liquidation point, so most of them are 0. So when the core value hits 0 or -10, -8, -6 for tiers 1, 2, and 3, then it would exit those trades. So it hit that liquidation point and got us out of those trades there. And then the next day, which was the 22nd, we entered trades. We entered shorts again over here and over here. The market was continuing to go down, but had some reversals, and we actually got out because of directional liquidation, which saved us from further losses, got us out over here, part of our risk management tools. And the last day we made a little bit of money on working time, so we got in on a short over here and exited due to working time, which is half hour before the day closes. We get out of the trades and we were out there. So bad day, bad week for us, negative $10,378. But when you look at it from the grand scheme of things, we are still up. This is our total, so we are still up 7,000. So we are still in profit of 7,000. Our initial deposit was 100,000. We have 7,000 in profit still. Here's kind of our graph. So as you knew last week, if you saw our video last week, we had made $12,942. This was the week of, let's see, this was the week of the 12th to the 16th. So that was a positive week. And then we had this negative week, which was the week we're talking about now, which was 5/19 to 5/23. But all in all, we are still up $7,766.79. We will continue to make modifications to our algorithm and see how it performs next week. Stay tuned.